Hello, are you tired of being poor? Stressed from working hard from 8 until 4? Want to gather up a giant gold hoard? Then you should try to become a landlord. Landlording is easy, there is no trick. Earn lots of cash while being a huge Don't have the money? There's no need to fret. A bank will lend you the funds to cover your bet. Become a landlord today, join the throng. Ask yourself, what could possibly go wrong?
Taking out a mortgage to become a landlord is a terrible idea. First of all, when the worker's paradise is realized, you will be
reeducated
almost immediately. Even before we cast off the chains of capitalist oppression, you might trip over them and fall into
Circle 4, the money pit.
The people who take out mortgages to become landlords are just like you and me, tired of being exploited by capitalism. But instead of doing the obvious and joining their fellow workers in solidarity, they attempt to join the ranks of the bourgeoisie by becoming slumlords. These rubes get the idea from personal finance experts who for $129.99 a month will teach you how to become a real estate mogul. For $0, we'll give you the bullet points right now.
Step 1. Get mortgage by residence. Step 2. Rent your space to sucker tenants. Step 3. Use their rent to pay your mortgage. Step 4. Snort
Sugar
without fear of shortage.
In theory, becoming a landlord is simple and easy. In praxis, stapling plywood to your is a better use of your time. Let's review a landlord's legal obligations. Under federal law, a landlord is responsible for making sure their property is
habitable,
meaning at a minimum it must have all of the following:
a waterproof roof, unbroken windows and doors, working plumbing and gas lines, running hot water, working heating fixtures, working light fixtures, clean common areas, proper waste removal, no vermin or pests, floors, stairways, and railings in good repair, locks on windows and doors.
If one of these requirements breaks, a landlord is responsible for fixing it. Remember all the times you've called your landlord to repair your apartment? If you lease property, you'll be the one getting these phone calls. Of course, if you raise this objection with real estate gurus, they'll have the perfect solution for your landlording woes.
A property manager you hire to answer calls and put out the fire. They do the work while you rake in the loot. Gosh, isn't capitalism a hoot?
Because if anything spells Occam's razor, it's
LLC,
which is what you'll become if you hire employees to manage your property. Because you just won't be hiring a property manager. You'll be hiring a maintenance person, an accountant, and a lawyer to deal with the inevitable litigation. And let's not forget that you're paying for everything, the property, the repairs, and the lawyers, with money you've borrowed from the bank. Money you're relying on your tenants to pay back with their rent. Which means if any of the following happens:
floods, tornadoes, earthquakes, hurricanes, a global pandemic, tenants cooking meth in the bathtub, spiking crime rates, long-term road construction, bear relocation, eminent domain,
you're Make no mistake, people can make a lot of money by being slumlords. And that's the problem. Because those who create wealth from real estate are wealthy to begin with. So they have the funds to pay for landlording essentials like new water heaters or police bribes. Basically, if you want to be a successful landlord, you need two things: lots of money and amorality. Since you're probably a sane person, you have no interest in ever borrowing money to become a landlord. You can just sit back and laugh at the buffoons who find themselves up to their eyeballs in mortgage debt because of their own arrogance. All the while, you can ignore the fact that these buffoons are the smallest percentage of mortgage hell's residents. The vast majority of people up to their eyeballs in mortgage debt aren't there because they tried to get rich quick. They're in mortgage debt because they followed the conventional wisdom that says a house is the best investment for the middle class. Some people follow this advice to the bitter end and find themselves in the fifth circle of mortgage hell.
Circle 5, the house rich and the cash poor.
You know, it's a good thing none of you are big fat guys, or this would be really uncomfortable.
While some people say a mortgage is a loan, other people, mainly mortgage brokers, say it is an investment. And they're not wrong. To understand why, we must define the term
equity.
Equity is the difference between the appraised value of your home and any outstanding loans recorded against it. Understand?
Why do you keep asking? The answer is always no.
Fine. Essentially, equity is the theoretical profit you would earn if you sold your house. For example, let's say you bought a $200,000 house. Because you're a wise comrade who watches our program, you make a 20% down payment of $40,000 and borrow $160,000 as your mortgage. In theory, if you sold your home for the same price, $160K would go to paying off the mortgage. You'd get back the $40,000 you'd already put down, and your net profit would be $0. Now let's say you lived in your house for 20 years and managed to pay down the mortgage
Principal.
so you only owed $100,000. Let's also assume that over the 20 years you were paying down your mortgage, the value of your home rose to $300,000. If you sold your home, $100,000 would go to paying off the mortgage. You'd get back the $100,000 you'd already put down, and the last $100,000 would be your net profit. This profit is equity. Equity is why people view homeownership as an investment. If you buy a home, there's a reasonable expectation its value will rise. As long as people are charged for the right to exist, property is a
solid
investment. The problem with investing in real estate, though, is if you only invest in your house. You do this by either A, refusing to diversify your portfolio, or B, buying such an expensive home that your mortgage payments consume the entirety of your income. If you recall from our 10 home buying commandments, we said you could only afford a home if
you can still put 20% of your income towards retirement after making your house payments.
Putting at least 20% of your gross income into a separate retirement account is vital to your future financial health. And having 3 to 6 months of expenses saved up in an emergency fund is vital to your present financial health. If your mortgage payments are so big they prohibit you from having a retirement account or emergency fund, you are putting all of your eggs into the one basket that is your house. Besides the fact that the value of your home could be wiped out by a market crash or natural disaster not covered by homeowners insurance, investing entirely in your house has a very serious flaw. The flaw that a house is a
solid
asset as opposed to a
liquid
asset. Meaning, in theory, you can only cash in on your home's equity by selling. And unlike selling stocks, bonds, or firearms in America, selling a house is a time-consuming and complicated process. Luckily, the mortgage industry has some wonderful products for the house rich. For a minimal adjustable interest rate, you can access your home's equity and treat yourself to a new car or vacation to Siberia. All you have to do is become part of
Circle 6, the HELOCs.
To be house rich and cash poor means you can only draw upon your home's equity if you need money. Granted, those of you who are renters and still cash poor probably have little compassion for the house rich. But let's not be like capitalist pigs. Let's actually have empathy for other human beings and understand why being house rich is so painful. The house rich often find themselves in the sixth circle of mortgage hell, reserved for those who take out a
second mortgage,
which is exactly what it sounds like. A second mortgage is another loan you get from the bank. Just like your first mortgage, it uses your home as
collateral.
The only difference is the amount of your second mortgage is based on your home's
equity.
So if you lived in your home for 20 years and earned $100,000 in equity, you could in theory borrow that $100,000.
Wait, did you say borrow?
Yes.
So you're saying I would have to take out a second loan from the bank
Yes.
that I would have to pay back?
With interest.
Why can't the bank just give me the equity I've earned on my house? Why does it have to be a loan?
Because you, that's why.
Then why on earth would anyone get a second mortgage? Isn't one bad enough?
It does seem counterproductive to borrow more money on your home when you haven't even paid off your first mortgage. And if we were like other personal finance experts, we would give a long sermon about how the people who take out second or even third mortgages are irresponsible fools putting their homes at risk for some stupid reason like starting a ghost busting business. But that isn't the truth. The truth is, people take out second mortgages to
consolidate
other debt. Meaning, people borrow another mortgage to pay off other loans, like medical bills. Why do people so blatantly borrow from Ringo to pay Paul? Interest rates. Mortgages have lower interest rates than other types of debt, like credit cards that have APRs of 17% or higher. The idea is, if you're going to be in debt for a long time anyway, why not bundle all your debt payments into the one with the lowest interest? Again, if we were personal finance evangelists, we would decry the fact that people were getting into so much debt to begin with. How dare they be so irresponsible? Where's their willpower? What's more entertaining than bullying poor people for being poor? Unlike the evangelists, we at the CMPF acknowledge reality, as long as that reality adheres to communist doctrine. And the reality is, debt doesn't stem from personal choices. Debt stems from larger socioeconomic issues. In his book, Debtor Nation, Louis Hyman explains that since the 1970s, US wages have stagnated while the cost of goods and services has increased. Because wages stagnated so much, Americans have had to borrow more money and go on more payment plans to afford basic necessities. In our episode on battling debt, we pointed out that the leading cause of bankruptcy in America is medical debt. If you're still healthy, pray to your marks you never get sick because it could go poorly for you. The point is, people don't take out a second mortgage to buy a new car. Most people take out a second mortgage for the irresponsible reason of paying their children's medical bills. These people live paycheck to paycheck, trying to pay down all their mortgages, all the while feeling the noose of their debt get tighter and tighter, praying no major catastrophe strikes again. Because if disaster strikes, they will find themselves in the next circle of mortgage hell.
Circle 7. Foreclosure.
Foreclosure is when you learn what
Collateral.
really means. After an agonizing attempt of trying to keep your head above water, borrowing repeatedly against your home's equity, or even filing Chapter 13 bankruptcy, you've reached the end of your rope. Here, at the end of your rope, the bank who
services
your loan decides to yank the cord and seize the house you've lived in and paid for. Now, banks will say foreclosure as a last resort, not out of a sense of compassion, but because foreclosure is unpleasant for everyone. But make no mistake, if a bank concludes it will save more money by seizing your home rather than throwing you a lifeline, they will not hesitate to kick you to the curb. Because you're family to them, and family members always force each other's children to live on the streets. They say it is better to have loved and lost than never to have loved at all. But it is definitely worse to have owned a home and lost than never to have owned it all. And we do not wish this experience on anyone except capitalist pigs. Because it is painful to have something you've worked so hard for so long be taken away. To feel the cruel sting of a slumlord again, or worse, be homeless in a nation full of empty houses. What could be worse than losing your home? Who could suffer more than the foreclosed? People who not that long ago were tricked into taking a mortgage that should have never been. Who were not cast out of their homes because of poor financial decisions, but because of outright fraud, committed at every level of the financial sector. In the eighth circle of mortgage hell dwell the victims of the greatest financial disaster of the 21st century, so far. We're talking about those whose mortgages were subprime.